with Bassit. He's from Leeds in England, and he's made over $18,000 with Ascendex so far, which is really, really impressive.
So it just keeps me in check. In this game, I'd say it's all about patience, really. Essentially, it is risk-free money from your own pocket. It's risk-free. If you get to your payout, your first payout, majority of the platforms, you get your refund. If you make your payout, then that's it. It's risk-free.
You're currently funded over $300,000, which is absolutely insane, man.
To be honest, I want to just carry on scaling capital and then just try getting consistent payouts, 2-3%. Not move over from whilst platforms are here. You have to utilize them whilst they're here.
Hello everyone, welcome to a brand new Quant Tekel trader interview, and today we're going to be chatting with Bassit. He's from Leeds in England, and he's made over $18,000 with Ascendex so far, which is really, really impressive. So welcome, Bassit. I'm happy to hear about how well you've done, and I'm sure our listeners want to hear more about kind of the journey that it took to get there. So welcome, bro.
Thank you. Thanks for having me, fella.
So just to get started, how did you get started with trading? What was kind of the thing that inspired you to get started?
Well, first I got introduced to trading in like 2019 by a friend. Back then it was just really on the phone, click, 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 make money, don't make money, lose money. That was when I first got introduced. But then obviously you get YouTube, you get the education. The inspiration really is just come onto my computer, work maybe 2-3 hours a day.
And do you think that like the whole COVID thing kind of accelerated your whole journey with trading? Do you think that, because for a lot of people, that was kind of like the time when trading really took off for them and they started taking it seriously? I think it has to do with kind of like the loss of income for some people. They kind of wanted to explore other avenues and they had all this time. Do you think that that played a factor?
Yeah, definitely. Because I remember in COVID, I was trading. I was trading a personal account at the time, but it was just quick money flips. And then eventually you just end up losing it. So after all that, then I thought, this is not the right way to go about it. Look for education. Yeah.
Mm-hmm. And how did you discover prop firms? Because I know that for me, the big shift for me was prop firms. Because doing those little money flips isn't really long-term, sustainable in terms of like flipping accounts, making like 50-100% a month. That's not real trading. And for me, discovering prop firms was that switch of now I'm kind of like more of a real trader because I'm trading with bigger capital and I'm making smaller percentages. How did you discover prop firms, and do you think that that also played a big role in you kind of becoming profitable and actually pulling money consistently from the market?
Yeah, you know what? I can't remember how I discovered them, but I'm sure I've seen them online. And the best thing about it is you pay your upfront fee, and then get your challenge refund, and then that's it. Investment wise, you're risk free. You see. So and then on top of that, the rules, the daily drawdown, max drawdown, them rules are there to keep you disciplined. Because on a personal account at the time, on the personal account, it was just, I'd say, we're gambling really at the time. But then you got these rules with these the max drawdown, daily drawdown rules, just to keep you in check, manage your losses.
Yeah, and when you were coming up, kind of like trying to get more consistent with trading, what was your biggest kind of hurdle that you had to get over to kind of get to where you are now in your trading? What was that kind of switch that you made that sort of really made a difference on your journey?
It was managing risk. That's the big factor. It's always the risk. Keeping the losses small as possible, and making the wins, extending the wins bigger. That's the biggest thing.
Okay. And in terms of like how you do that, how do you kind of go about making sure that your wins are way bigger? I know your risk reward ratio would be way bigger, but in terms of like psychologically, do you have a specific way that you approach this? Is there more of a method to you taking profit that way, or is it based on intuition?
To be honest, intuition, because it's whatever the market's going to give you, because you can't you see some people might chase 1 to 5s, 1 to 10s, but whatever is given to me on the day on the market is all I can take. And that kind of money with prop firm capital is life changing. You see, you work a normal job here. You're not gonna make that much amount of money in a day working a normal job, 8 hours a day, never. So it just gives you that little bit. It gives you a bit of drive to see that kind of money, because people go out to work every day. It's normal, everyone works, but with trading specifically, them kind of big numbers on your screen, it really changes things.
Yeah, and I think with trading, it's a whole different kind of income. People are used to putting in X amount of hours and then getting X amount in return for the work that they've put in. Whereas with trading, you can put in a whole bunch of work and still not get paid. You can spend all day in front of the charts and get paid nothing. You can in fact lose money in that time. So people don't make that actual connection in their mind when it comes to trading. They're used to getting paid for what they put in. So it's a little bit tricky for traders to make that switch and change their mindset. Like, trading is not something that most people are used to. That's not the concept that people are used to. And that's why most people don't make it in this industry. Do you think that potentially is one of the reasons that people struggle? Why do you think that most people end up failing prop firm challenges and blowing accounts? Do you think that it's all psychological? And if so, what area do you think people are struggling the most with?
It is psychological, but it depends. I've got data to back up a certain strategy. So psychologically, my account shouldn't suffer this much. In the back of my head, it could do, but like in the back of my head, I'm thinking, yeah, lose 1%, 0.5%, 1%. But now I know that there's a win coming. So it just keeps me in check. And obviously some people, they just like to, I'd say, chase it. In this game, I'd say it's all about patience, really.
100%, man. And a lot of people struggle so much to pass these funding evaluations and get funded. How do you approach getting funded? Is it the same way that you trade your funded accounts, or do you manage them a little bit differently?
It depends, really. To be honest, my way is if the setup is too clean for me, I'll take it with maybe 2 to 3% risk on the challenge. It's because I've had payouts, so I can, afford to lose 1 or 2 challenges before passing one and getting a bigger payout just to cover all the losses with the challenges. But essentially, on a normal day, I'm coming in with 1.5% risk.
And that's on a challenge account, right?
On a challenge account as well.
This is like a theme that I see amongst a lot of the traders that I've interviewed. A lot of them are a bit more aggressive on the challenge accounts. And then when it comes back to doing the actual funded account with real funds that you are trading, that you could potentially earn, people are a lot more cautious. And I think that that's a great way to approach it as well, because again, like, you may have to fail a couple of evaluations so that you can pass. But as long as you're positive and making money, that's kind of the most important part of all of this.
I mean, it's basically like, it's like you're putting money in, you're risking your money on these challenges. But if you've got a real edge on the market, at the end of all of it, you pull your money out and then some profit as well.
Exactly. And it all comes down to trading like a business, because that's what a business is. You have to put money in to get money out. You have to invest money in your business to get money out. And people don't like to treat trading like a business. They want to treat it more like a lottery. They want to just invest a little bit and make a huge amount. They want to buy their lottery ticket and then expect to make 1 million times more than what they've lost. And I think that people miss the whole point of it. But I want to talk a little bit more about kind of your trading methodology. How would you describe like the trading theory that you use and how you approach getting into a trade?
First, it's just ICT, really. That's the approach I take in. Daily bias, try figuring out the daily bias, looking at the weekly time frames, and just aligning myself at the right time of the day, maybe London session or New York session, just to get into the say there's a down move, the retracement, 50% OTE level, take it down with the trend for the day.
in terms of like like you said, your risk management, it depends on if you're hopping in on a challenge account or if you're hopping in on your funded account as well, what you're risking per trade. And in terms of like your risk reward, what on average are you kind of shooting for?
1 to 2 really. 1 to 2. I don't take partials. I break even, but I don't take partials really.
Okay, and do you think that taking partials is a big mistake that traders make in general?
No, I mean, people could do in it, because at the end of the day, they're taking partials. If they comes back to their break even, they've still made money in the market. They've essentially still pulled some money out of the market. But I mean, it depends on the trader in it, how they feel. At the end of the day, it depends on who's trading and what kind of approach they're taking. If they take partials and they're making money off of it, then I cannot say anything about it really.
I think it comes down to your individual personality and how you like to, I guess, make profit, because some people prefer all of it up front instead of taking small profits as they go. But then they're willing to take maybe more losses in a row, maybe have a lower win rate because they're taking a much larger risk reward, but you're not going to hit that every time. You know, you're going to maybe hit your break even or stop loss more often. Again, I wanted to come back to kind of like your trading, like your actual trading entry. You're looking to get in on trades based on getting in on the OTE, like you said?
Yeah, OTE.
What time frame are you executing on generally, and why did you kind of pick that time frame?
Anywhere on the 1 to 15 minute, I'll enter. Anywhere between there. To be honest, because the time of day I trade, say from our time here, is from like 1:30 till 4 or 5. Yeah. Obviously, I'll wait for the bigger time frame and I'll align myself with the smaller time frame. At the end of it, I get a smaller stop and a bigger take profit essentially.
Once you're in on that time frame, you said you have more of an intuition based like take profit. Does that sometimes kind of like get in your head a little bit, or are you just generally shooting for that 1 to 2 in general? And then if, for example, you're up in profit, then you can maybe shoot for more. Like say, for example, your account's already in the green. Maybe are you then shooting for more?
Definitely. One thing is when the account is already in green, you're already in profit. I think it's psychologically it's much easier to let your take profits run. Then because when people are in drawdown, you're in kind of a danger zone, and then obviously the main aim is just to get back to break even or drawdown. Once you're in profit, obviously sometimes I set a hard take profit and I let it hit. But like if the market's running towards the take profit, I'll just take it off and let it run. Sorry, I was going to say, and if it reverses on me and it comes back to stop me out or break even, nothing you can do about it really. Take it on the chin.
Yeah, exactly. For a lot of people, like taking a break even is sometimes more painful than just taking a full loss. Seeing all the profit go up and seeing all the profit come back down to nothing. Do you agree?
Yeah, it happens. But in this game, in this industry, it is what it is. You can't be right. No one is right 100% of the time. Sometimes you lose, sometimes you win, sometimes you blow accounts. If you've got the system to back you up, then you don't need to really worry.
And do you back test your trades in terms of like getting confident with your trading system, or do you mainly just collect data as you go along with like live trades?
I do forward testing, but I paper trade really, and then I back test as well.
I think you said you got your first payout earlier this year in February. How did that feel to get your first payout like after so long? You said you've been doing it since 2019. Was that kind of like the snowball moment where things, started to really take off? You see that it's possible and now you kind of run with it. How did that feel and how did that affect the rest of your journey?
To be honest, it put a lot of things into perspective, getting a payout from a prop firm, because essentially it is risk-free money. From your own pocket, it's risk-free. If you get to your first payout, majority of the prop firms you get your refund, and if you make your payout, then that's it. It's risk-free. The money you're losing on the funded account, it's not really money you're losing from your pocket. With a personal account, you're losing it from your own pocket. For some people, it's like a psychological barrier between the two. I prefer trading platforms. The reason of it's not my money in my pocket.
I 100% agree. I think like trading with prop firms is a no-brainer, and as long as you're trading with the right prop firm, it's so easy to get fooled by prop firms that offer you all of these things for a super cheap price, and then they can't pay you when it comes to payout time. Which is why it's nice that Quant Tekel has such a solid record with paying, and they're so quick to pay. Really, that's what it comes down to. Find a prop firm that has a really good record and you will get paid out. Prop firms are kind of like insurance companies. You know, there's a lot of them out there that will give you issues. And if you speak to people, there's going to be horror stories about people not getting paid out in both of these regards. But you'd still be stupid not to take advantage of the opportunity of trading with a prop firm, the same way that you'd be stupid not to have insurance. It's the same thing. It's an opportunity you need to take advantage of. Just do your due diligence and work with reputable companies. Just because there's like a few people that have had negative experiences because they were most likely dumb and didn't play by the rules, doesn't mean that it's a bad opportunity. In fact, like trying to make it on your own with private broker accounts is so much harder. People are shooting themselves in the foot by not taking this opportunity, honestly. And I wouldn't be profitable now if it wasn't for prop firms either. It just, mentality-wise, there is a shift that happens because you start to trade more like a real trader when you have enough capital to trade. If you're trying to flip small accounts, that's just pure gambling, and it's not going to be sustainable long term. In your kind of like journey to coming up, did you kind of like go through the normal like signal groom type things, courses? Have you done a lot of courses? What's your take on that whole industry?
I've only recently just joined a mentorship a couple of months back, but before that, all ICT's content is on YouTube for free. Just after COVID, that's when I discovered ICT. Obviously, from there, I've just been watching his videos, and now I'm part of a mentorship that covers ICT, which is great. That's the only mentorship now that I've literally been part of.
And what do you think about like people that have negative stuff to say about ICT? What do you have to say to them?
It's a bit controversial. A lot of people are making money using it. Every strategy, a lot of people are making money using their own concepts at the end of the day, and a lot of people are losing money in the same regard. The people who can trade, I mean, they will trade, but they can trade their own way. The people who are trading ICT, I mean, to me, the concepts work. That's all I need to say. It just gives me an understanding of the market. That gives me just a little edge in the market where I can just pull money out of it.
For me, it's just like another language that you use to read the market with. I mean, whether you're using support and resistance or if you're using fair value gaps, it's just a different language and a different medium to see the market through. Doesn't mean necessarily that the creator of it is necessarily a profitable trader anymore, or maybe they were at one point. That's up to you to decide. But just because you think badly of that person doesn't mean that other people can't take those concepts and use that lens to view the market in a way that allows them to trade it profitably. And I think that, you know, it gets a bad rap in that way. But again, it's just another language and another filter for you to look at the market through. And a lot of people are doing it profitably. A lot of people. And I think that people just complicate things way too much. And if they just pick one or two concepts, whether it be ICT, whether it be support and resistance, whatever it is, and just stick to those few concepts and master them, then, you know, the sky's the limit, because people are just constantly chasing new things, new shiny object syndrome all the time. And it just causes you to be completely confused, completely overwhelmed. When it comes to starting as a new trader, what would be your number one piece of advice to somebody starting out there that might be looking at ICT and they're looking at some of these gurus making a ton of money and they're kind of like overwhelmed and confused? What kind of advice would you give them?
Create a system. Backtest a lot. Create a system. And if you ever go into live markets, manage your risk. That's it really. I think it's more reliant on the system. You can't come into the markets on a failed approach because you just will lose money. Create a good system, backtest it, you get your results, you apply it. But then again, there's a psychological barrier that you have to overcome yourself, discipline yourself. Nobody can teach you that kind of stuff. Well, I'd say anyone who new is coming into the market, just do your research.
I think it all just comes down to doing your due diligence. And a lot of people just, hop straight into the first thing that they see, and they have unrealistic expectations for trading. Like, oh, I'm going to deposit $500 and turn it into $10,000. Just because somebody claims to have done it.
I did it. I lost £500 to £15,000 and I lost it. This was like 3-4 years ago. 3-4 years ago, I did it and I lost it.
I've heard so many people with that same story of I had just started and I made so much money and then I lost it all immediately. It's designed for you to treat it like a casino in a way, get that high and then, lose it all. In terms of like your future for trading, you're currently funded over $300,000, which is absolutely insane, man. And you've obviously proven that you can get funded over and over again and get payouts. What are you looking to do to kind of like expand? What are your plans for the future of your trading?
To be honest, I want to just carry on scaling capital and then just try getting consistent payouts, 2-3%, and then just eventually move to a personal account. Like, no, not move over from whilst prop firms are here. You have to utilize them whilst they're here. Of course, personal account. I mean, people with large, deep pockets go into personal accounts. So that's what I'm saying. Scale the capital, get the payouts, move a bit aside to a personal account, slowly build. Yeah, because if one day every prop firm goes down, then at least I have a personal account. I got the payouts from that firm back in February of this year. I got the payouts and I was happy because it was my first. I got 2 payouts from that firm. 1 or 2 weeks later, they completely shut down. I stopped trading for a couple of months. I stopped.
That must have been like really discouraging because you had just started to make money and now, it seems like the one thing that had been working is now not working anymore. I know a lot of people that got really discouraged when like some of these big prop firms fell down. What do you think kind of sets Quant Tekel apart from other prop firms that you've traded with? What kind of makes you trust them a little bit more?
One big thing is directly having contact with Alex. That's one big thing. And, with the mods in the Discord, really helpful. The issues, they get solved. But the main thing is you follow the rules, you get paid. That's the main thing for me. Follow the rules and get paid.
I think that's the main thing with prop firms, and they get a bad rap because as soon as somebody has something negative to say, they blow up about it. But when it comes to positive things about prop firms, people don't really care. They don't really care to talk too much about it. As long as they get paid, they just keep quiet. It's an interesting relationship that customers of prop firms have with the prop firms themselves. And that's coming from someone who's traded prop firms for like the last 3 years. I think that prop firms are here to stay. I don't think that they're going anywhere, especially prop firms that are run properly and have the right risk management in place and have the right rules. I think that they're here to stay and we need to take advantage of them because trading personal capital is great, but it's a lot harder. Because remember, when you go into drawdown, you're going into drawdown on real money. You're going into drawdown on your own money, and it's going to take you months to get out of that drawdown. Whereas with prop firms, you can just get another account and start trading that, And so for me, like that whole mentality is a whole big kind of cheat code to trading profitably long term. It kind of gamifies the whole thing to the point where I can honestly see myself trading that way for a long period of time. But when we started out with this, for a lot of us, like pre-COVID, prop firms weren't really a thing. It was all just depositing money into brokers and trading that. And trying to flip it to bigger amounts because none of us really had, hundreds of thousands of dollars to put into an account, right? So if you had to go back to 2019 when you were starting, what would you tell yourself to do differently when you were starting, if anything at all? What kind of advice would you give yourself when you were starting that would maybe change the whole trajectory and maybe make you get to where you are now faster?
Even if you're on a personal account, manage risk. That's the biggest factor. Manage the risk. That's it. Eventually, it will come to you naturally. You will lose, but eventually you learn, don't you? From mistakes, you learn and you learn and you learn and you learn, and then it'll come to you. But the risk again, the big factor.
Yeah, I agree totally, man. Well, Bassit, it was really great to talk to you, man. I think a lot of people watching this will have learned a lot from your experiences, and congratulations on doing so well this year with your prop trading. I'm sure that you're going to go from strength to strength going forward. So thank you very much for chatting with us, man.
See you later.